Record money flowed into ETFs in 2025, so where can the market go from here? This is Inside ETFs, and we're looking at trends for the year ahead. 2025 was a big one for ETF providers. Globally, assets grew over 30% and they're closing in on $20 trillion. Much of that was driven by retail investors as trading apps went mainstream, while massive market rallies sparked fears of missing out. So what could 2026 bring? Cinthia Murphy is an investment strategist at VettaFi. Cinthia, what trends stand out to you from 2025?
Hi, Elena. It's been quite the year coming into 2025. As you look back, I always like to look at the beginning. I personally expected things to moderate a little bit. Everybody was nervous about uncertainty. I thought folks would be more cautious. And instead, we saw over 30% growth in asset gathering ETFs in the US, as well as globally. Massive record where we just crossed $1.4 trillion in asset gathering in the US alone, and massive appetite for your, big risk asset kind of portfolios, your large caps, your growth names, your tech. So it's been a year that I think surprised a lot of us just how resilient that appetite for risk remained, even though the conversation centered around uncertainty, caution, concern about concentration. The tilts towards that strong exposure on large cap remained uncontested in 2025.
We did also see a lot of investment, though, in products that were meant to be more secure, like fixed income ETFs. Why were those so popular?
It was a year of this pursuit of you don't want to miss out on this rally that keeps on going, defying the odds. But you also want to start to think about diversifying. So we saw a return a little bit to fixed income, especially in much lower duration. So you're anywhere from 0 to 3 months, 1 year. And we start now to see a little bit up to the 10-year maturity. So just a little bit of duration risk, capturing that income and protecting your portfolio a little bit. We also saw a lot of appetite for other forms of income, like derivative income, that options-based type of income, which is, again, it's cash on your pocket, it protects your portfolio a little bit, it diversifies your risk a little bit. And then we saw appetite for other things like gold remain strong, even Bitcoin, which had a rough year in terms of price performance, also gathering assets. So there was some diversification going on to that large cap concentration, tech name focus that a lot of investors held on to.
There's also been a shift, hasn't there, from passive to active ETFs. What's driving that, and do you expect it to continue?
That's a shift that started happening once we had new regulation come in a few years ago, and a lot of active managers suddenly started coming into the ETF space. So from a product development perspective, we've seen over 80% of new launches this year, which exceeded 1,000 new funds in the US market, a massive number, all in the active space. Flows are still active, taking about a third of all asset flows. So passive is still dominating in flows. But the trend is for active is kind of like the old new kid in town, and a lot of new asset managers coming into the space, trying to claim a slice of the active market. Because the passive market is pretty, well dominated. It's hard to compete on your core S&P 500 strategies or some of that. So it's really been a space that has gathering traction, and we should continue to see that continue in 2026.
Looking ahead then, where might those asset managers be looking for opportunities in areas that perhaps haven't attracted too much interest from ETF investors so far?
Yeah, the challenge with the crystal ball is that, who knows? I mean, coming into 2025, we're looking for small caps to stand out and all sorts of other assets to take the spotlight from large cap equities. And here we are talking about large cap equities. That said, if you look at all the big asset managers' outlooks, your BlackRocks, your Vanguards, everybody's calling for, hey, let's be cautious here. Things could start to moderate. Some of the big themes that have driven large caps, like AI, are transitioning into more of, show me the results, not just the investment into, CapEx AI investing. So there's a tone change. So we're looking for things like small caps to start doing well. They just actually started picking up pace into the late 2025. International stocks have had a phenomenal year compared to US stocks in 2025. We expect 2026 to remain compelling for that. The value versus growth, value to really start shining. And in the fixed income space, the kind of the middle of the curve, a little more yield for not so much risk as we look at what the Fed does with rates. So there's a lot of interesting opportunities going into the new year.
That was Cinthia Murphy of VettaFi. Don't forget, you can watch more videos on Reuters.com.